Key indices slip in late trade to end near the day's lowest point. Financials were the big drags, followed by pharma and consumer durables. Mid-cap index gives up all the gains. Gold prices surged to a new record high, driven by safe haven buying and strong demand in India during festivals.
Marico clocks in a good quarter with volume growth of 5% on the back of a strong pickup in rural demand, even as urban offtake wanes, while Dabur meets muted expectations in Q2.
Swiggy, which is set to launch its near 11,000 crore rupee IPO next week, expects the quick commerce business to drive growth and food delivery to drive margins going forward. The food delivery to quick commerce major will invest in dark stores and repay debt with the fresh issue proceeds. Hello and welcome to a fresh new edition of Markets Forward, your go-to program where we aim to get you everything you need to know as you prepare for the next trading session. Today, it was a bit of a lackluster, directionless day. I am Prashant. With me, my colleague Surabhi Upadhyay. Surabhi, hi.
Hi, Prashant. Absolutely. If the Bulls were hoping for a green hat trick, well, they would be a little disappointed because we didn't quite get there.
I was going to say a blah kind of a day, and I said, well, that's not TV appropriate, I think. But anyway, I mean,
that's better than a bleak fall, right? Yeah, so blah is better than bleak. Anyway, let's get back to today's action.
No, absolutely. And, so listless, directionless, whatever you want to call it, because you basically you started lower, but with a 100-point cut, there was a 100-point recovery, and then, by close, there was a 100-point cut again. So not very much to really learn or take away from today's session in terms of what you can do tomorrow based on what you saw today. Bank Nifty, it kind of failed to see follow through. And I'm only mentioning that separately because yesterday you had a 2% rally in the Nifty Bank. We ended above the 20-day moving average. I must say, though, we gave up almost half of yesterday's gains, but we've managed to defend the 20-day. We've closed above the 20-day moving average, even with that 0.9% cut. Mid caps, small caps, micro caps, that's where bulk of the action was. And that space did well, and market breadth as a result was comfortably in the green. Many more advances as compared to what went down. And, I put that sort of piece out yesterday, just listing out the dateline with the big global events which are lined up over the next 5, 7, 10 days. And I think it's just, can you take a very decisive call if you're trading going into all of these events? And I think the answer probably is no. So you got to kind of live day to day if you're trading. And that, I think, is what is happening and you saw that with lots of specific stock-specific movers reacting to news one way or the other, recovering from sell-offs, and seeing profit booking after sharp run-up. So that kind of a session today. Surabhi.
Absolutely. And I guess the saving grace from a bull's perspective is that at least the Nifty managed to protect 24,300. We at least had a close above that level. But if you're talking about the sectoral composition, then lots of selling in financial stocks, banks and non-banks, selling in IT, selling in, a lot of names on the PSU side as well. So that was pretty much it. A lot of healthcare stocks, pharma and healthcare also coming under pressure. Actually, the only pocket of green was consumer, some of the larger FMCG names, and auto. Autos are interesting because after being beaten down in the last few weeks and days, there's been some buying in anticipation of perhaps not so bad numbers, the monthly numbers that we'll get from the 1st of November onwards. So, well, we have plenty of these trends to go over, and we will dive a little deeper into all of them as we go forward. Let's tell you about the lineup in terms of today's show. So we'll start off, of course, with key movers and shakers. Vivek will give us the blow-by-blow account of what happened today. The stocks on our radar include major players from the FMCG space. Dabur reported numbers in the afternoon. Marico came out with a pretty good performance. We'll talk about that. Shares of five-star business finance fell in trade, and we'll tell you why in just a bit. That was a big casualty, 12% lower. We will get you all the details. And then, of course, tomorrow's earnings and other events to watch out as well. But right now, it is over to Vivek for all the stock-specific action.
Well, thank you so much for that. Like you mentioned, quite a listless day, Nifty going nowhere. But in the broader end of the market, it's quite a lot of movers. And especially when you're looking at the auto pack today, the entire auto pack bounced back quite significantly. Yesterday, you saw quite a bit of buying in Maruti from the day's lowest point. And today, that particular up move continued. And along with that, the two-wheelers and some of the ancillaries too did quite well. The next stock on the radar is Poonawalla Fincorp. Just a couple of days back, after a very weak set of numbers, the stock sold off quite significantly. But in the last couple of trading sessions, very very strong upmovency, and stock has managed to recoup most of the losses that it saw post the muted Q2. When you're talking about the third stock on the radar, it was Reddington. Reddington, very strong set of results. When you're talking about the cloud as well as the mobility business, some growth seen over there. Stock higher by almost 10%. AB Capital, came out with its set of results closer to the end of the trading session. Profitability higher by almost 40%. Stock, quite a bit of a spike, almost 5% higher. And Lakshmi Organics, quite an outlier as far as the chemical pack was concerned. Very strong margin expansion seen over here. Revenues to grow quite strongly. Stock ended higher by almost 7%. But on the other hand, quite a few laggards as well. First on the list has to be Cipla. The company had the conference call yesterday post-market, guiding to a more muted H2, and that is something that led to quite a bit of a sell-off as far as Cipla is concerned. MCX, murmurs of quite a large block, one of the top laggards as far as the F&O space too was concerned today. Five-Star Finance, we'll talk more about it, but a guidance cut keeping that particular stock under quite a bit of selling pressure. Honeywell Auto, again, quite a bit of a disappointment as far as this particular name was concerned. Margins contracting, missing estimates, Nuvama going ahead and slashing estimates, and stock sold off almost 7%. And lastly, Star Health, again, quite a bit of a miss in this particular quarter. Combined ratio management alluding to the fact that they may not be able to meet what they had guided for at the start of FY25. So that was one of the top laggards as well.
All right, Vivek, thank you very much for that. Mayuresh Joshi is with us, and so Shrikant, Chouhan. Gentlemen, great to have both of you here. Shrikant, any price action? How would you analyze near term? How's it looking? Nifty, Bank Nifty?
Yeah, Prashant. I think it's a completely directionless sort of market. But prior to that, I would like to wish you and your team a very happy Diwali and healthy and wealthy year to come, as we saw in the last 12 months. But if we just go through with the overall activity of the market, then I think it is consolidating after hitting the major lows like 24,000. If we go through with put call ratio and India's VIX, then I'm of the view that it is completely oversold market. And today the market has taken a pause. 24,200, 24,250 is going to act as major support for the market until the markets are not sustaining below these levels. I am expecting market to rebound again. I'm expecting a pullback towards 24,700 or maybe 24,900 in next 1 or 2 days of time. Bank Nifty has also taken a pause, but there also we are expecting furthermore upward activity in the near term, because most of the banks, they did really well in yesterday's trading session, and today we saw some sideways sort of activity. So I'm of the view that tomorrow, in case if we see any downward opening for the market, then there we should look for taking some contra bets in the market. And about 24,500, I'm expecting market to come into this short covering trade.
Okay, got that. So we'll keep that in mind. Shrikant, stay on. We'll have some more questions for you in just a bit. Let's quickly get to the first stock of the day, and that is Dabur. Actually, both of these stocks were in focus today, Dabur as well as Marico, on the back of second quarter numbers. Mangalam is here with a quick snapshot. Mangalam?
Well, Dabur came out with their numbers just towards the end of market. The stock mildly in the green, and that's largely because of two reasons. One, the volume decline was lower than feared. Volume decline was 7.5%. The street was expecting about 8 to 10% decline. Secondly, the overall results, which were soft, but were well prepared by the street, by the company in its second quarter update itself. So if you look at the stock price move, it was down about 12-13% in the month preceding these numbers itself. So maybe there was a bit of a relief out there. Additionally, the company has gone ahead and announced an acquisition of Sesa Ayurvedic Oil for an enterprise value of anywhere around 315 to 325 crores, implying a net cash outlay of no more than 40 to 50 crores, given the debt that they have on their books is close to 290 crores. Will be interesting to see where they scale this business up from the 133 crore revenue run rate that it did in FY24 itself. As far as the reported numbers are concerned, revenues a little under 3,030 crores, mildly below street expectations. The EBITDA was largely in line. The net profit was softer than street expectations as well. But the secondary sales of the company in the second quarter grew by 2%, with rural demand outpacing urban demand by 130 basis points during the quarter. On the other hand, we had Marico, which did extremely well in today's trading session because the numbers were better than street expectations, but more importantly, the management commentary. They said they will see further improvement in volume growth going forward. Price growth is likely to come by as well, which means that maybe, margin decline would be limited to just about 50 basis points. And more importantly, they haven't, ruled out a possibility of a double-digit revenue growth for the entire year even as they are confident of doing double-digit revenue growth in the second half of this year itself. Very positive on the prospects of the food business as well, which they believe over the next 5 years can be much bigger than the oil business. So that stock ended about 3.5% higher.
Okay, all right. So, tale of two different series there in some of these FMCG names. Mangalam got it. Thank you very much for that. Let's go across to Mayuresh and get his sense on it. Mayuresh, what do you think? I mean, would you kind of buy the dip and buy the bad phase for Dabur, or would you stick to winners where the growth numbers are far more clearer, like in the case of a Marico?
Afternoon, Surbhi. So I think looking at how management commentaries have been, I think Marico seems to be a far more plausible bet at this juncture. Obviously, as Mangalam mentioned, the expectations of a solid volume growth expected to continue is something that will augur well for Marico. Parachute has seen both value and volume growth. You're probably seeing bottoming out happening in value-added hair oils. The international business is resilient. More so, I think the Bangladesh operations have been extremely resilient so far. Foods business, as Mangalam mentioned, an annualized run rate of 1,000 crores. Personalized premium care is expected to also grow quite significantly. So I think if you look at all the check boxes, Marico is probably ticking that: volume growth, margins, expectations of relative outperformance compared to its peers as well. So yeah, given a choice at this juncture within the space, I think Marico seems to be a far more plausible bet compared to others.
Okay, all right. Shares of NBFC, Five-Star Finance, fell 12% post its second quarter results. The decline came after the management trimmed its growth guidance for assets under management, reducing it from 30% to 25%. They've also lowered interest rates that they charge, perhaps after a nudge from the regulator. Abhishek is here, though, to take us through some of these details. Abhishek, take it away.
To begin with, the Q2 FY25 performance is also a 5-star performance coming in from Five-Star Finance. So take a look at AUM growth of 32% YOY and about 5.5% sequentially. The NI growth is robust at 30% YOY and about 6% sequentially. PAT is also up 34.5% YOY and about 6.5% sequentially. The net interest margin has improved sequentially and the asset quality has largely remained stable. However, management in the con call did mention that FY25 credit growth guidance has been cut to 25% from 30% that they had earlier, and they have cut the lending rates by 200 basis points, which has been taken negatively by the street. Analysts say that this might be a regulatory nudge that RBI has been guiding in. So IFL Securities has written on Five-Star. They have a buy recommendation, target price of 890 per share. They say that good Q2 FY25 has been overshadowed by the guidance cut that the management has given. So Five-Star lending rates are about 24.3% and they make a spread of more than 14%. So RBI had taken action for growth and profitability moderation for many of the NBFCs earlier, and this might...
Okay, all right, Abhishek, thanks very much for that. Mayuresh, out of this entire pack, would you want to buy anything? I'm talking about the NBFC, MFI, where we've seen so much price damage.
So Prashant, I think within the mid-cap space, Canfin Homes and PNB Housing, I think, have given excellent set of numbers. What they probably delivered in terms of asset quality pressure is actually coming off. NIMs remaining stable and expanding in the case of PNB Housing. PNB Housing foraying into the emerging and affordable segment where the yields will be far larger. And they've got a very strong credit underwriting policy even for these segments as we speak. Similarly for Canfin Homes, if you probably look at how the asset quality pressures have started coming off, even in this quarter, expectations of a rate cut cycle at some point of time, the borrowing mix that they probably have, and expectations of a very strong liability franchise that they probably own. So I think within the broader universe, stocks like a Canfin, PNB, larger names, Shriram has given excellent set of numbers. The management expectations, specifically in terms of key pockets like two-wheeler financing, remains extremely strong, and their exposure specifically towards unsecured or personal finances are a meager 3.5%. Valuations might get a bit expensive for Shriram, so wait for declines. But I think some of these qualitative names, in our opinion, can continue.
Right. Shrikant, I just wanted your thoughts on autos because stocks have corrected quite a bit. Any setups look interesting? Any trades one can take?
See, from the auto basket, if we consider stocks like Mahindra and Mahindra and Eicher Motors, I think they are much better placed as compared to other stocks. Even Tata Motors is also very close to its important support levels. And while looking at the entire sell-off that we saw in last, let's say, few days or few weeks, most of these stocks are very close to their 200-day simple moving average. At the same time, they have corrected sharply from their highs, and percentage-wise also the decline is huge. I am of the view that we should again look for adding stocks like Tata Motors, Mahindra and Mahindra to our positional portfolio. But specifically, Eicher Motors is doing really well. There we are expecting stock to surpass the level of 5,000 based on its technical formation. And I think Tata Motors is also a very strong candidate to buy with a contra view.
Okay. All right, got that. Stay on, gentlemen. We'll come back to you for some more questions. But let's go back to Mangalam, because it's going to be all about the food delivery space in the next couple of days, not just because you want to order more for Diwali, but because Swiggy is making its way to the street. The IPO is all set to sort of take place 8 November. And the market capitalization of Swiggy will be well over 87,000 crore rupees. We've got Mangalam with the big numbers. Mangalam.
Well, don't lose sight of just the food delivery, food apps for Diwali. You also will use the quick commerce to order last-minute things for Diwali as well. And out there, both Blinkit and Instamart will be in focus. So from a D-Street standpoint, it is one of the most awaited IPOs of this year. Swiggy opens on November 6th, closes November 8th, with a price band of 371 to 390 rupees per share, roughly amounts to an IPO size of 11,300 crores at the higher end of the issue band. 4,500 crore rupees is what the fresh issue is, with the rest coming in as an offer for sale. At the higher end of the issue price, it would be around 87,300 crores in terms of market cap, which is a little over $10 billion, but a lot below Zomato's own market cap of 2.2 lakh crores itself. If you look at the gross order value for the B2B, B2C business for Swiggy, it's increased from 20,000 all the way up to 35,000 over the last 3 years, with the first quarter being closer to 10,000 odd crores. In that, the food business gross order value has increased from 18,000 crores to 24,000 crores, with a sharp expansion in contribution margins as well. The growth driver for the company in terms of the top line will be the quick commerce, which from 1,600 crore as a GOV has gone all the way up to 2,700 crore for the last quarter's GOV itself. And out there, while there has been improvement in operations, it's still contribution margin negative. So growth out there will be crucial to track. Two things that the company said which stood out. First, they will open close to around 1,500 dark stores over the next 4 to 6 quarters with the money that they're raising with the IPO. And secondly, food delivery EBITDA margins are shy of 1%. On a steady state basis, they could be about 5%. For all of this, what is it that you're paying? Assuming that the top line growth for the industry remains between 32 to 35%, as a lot on the street are expecting, Zomato at 2.2 lakh crores is trading at close to around 10.5 times sales, whereas the same for Swiggy at the upper end of the issue price is close to around 4.2 times as well. The street was bracing itself for a 25 to 30% discount versus Zomato, but this one seems to have come at around 60%. So let's see how the subscription numbers go.
All right, Mangalam, thank you very much. Very interesting comparison there, and I think there'd be a lot of focus, sharper focus on it over the next couple of days as the issue gets going. 6th of November, I think, is when the IPO will kick off. Mayuresh, any thoughts on this one? The IPO, I don't know if you've looked at the Swiggy numbers which Mangalam put out, or Zomato for that matter, if you own it.
No, so to a large extent, I think Swiggy numbers, because of the contribution margins being lesser in the case of Swiggy, I think there is some element of pain out there, but they have been reducing. So I think for quarter one, they've come down to a negative 3% from negative 6 or 7 odd percent. So if they're able to turn this round, like Zomato was able to turn Blinkit round, I think that is going to be a game changer along with food delivery, which is expected to do well. Obviously, from a valuation standpoint, Swiggy is at a discount compared to a Zomato at this juncture. But again, Zomato is also loaded with cash. You've already seen 10,000 crores of cash on books, with another 7, 8, 9 odd thousand expected to get raised. They're also expanding their dark stores. They're also expanding their warehouses. And even Zepto, the unlisted peer, has had a decent valuation in its latest series funding that it probably has. So I think all these aggregators, food delivery apps, very much in focus. So let's see, I think, how the subscription numbers come out for Swiggy. At least at this juncture, we continue having a hold rating on Zomato. The sheer expectations, Prashant, is that they deliver around 10 to 12 lakh orders a day. And they've actually raised their platform fee from 7 rupees to 10 odd rupees. Zomato's in this festive season is just going to make a killing per day of almost 30 odd lakhs just by raising the platform fee by 3 odd rupees.
Okay, all right. Absolutely. Thanks very much for joining in. Mayuresh, good speaking with you. Shrikant, thank you very much for being with us here on the program as well. Thanks, both of you. We'll take a break. We are going to come back with some of the corporate commentary we got through the course of the day. and some of the events to watch out for when we return tomorrow. Stay with us.
Welcome back. Well, let's take a look at some more management comments that we picked up during the course of the day. First up is Maruti. The management says retail sales grew 14% from the Shraddh period in September to Diwali. The management also adds that inventory before the festive season was at 40%. It expects this inventory level to fall down to 30 days by the end of this month. For the current fiscal year, Maruti's management is guiding for growth to be in line with the industry at around 3 to 4%.
Canara Bank spoke to us as well. They're expecting FY25, that is full year, credit growth to exceed 11%. Management says that they don't see any threat to slippages increasing. Remember, they had a little bit of issue in the SMA2 loans. They said that the unsecured book is very small for the bank and slippages from that will be very low. We also had the management of GMR Airport. Saurabh Chawla was with us, and he said that the company is provided clarity on recent news reports of a Supreme Court order indicating no relation with decision-making powers of the AERA, that is the Airports Economic Regulatory Authority, on non-aero tariffs. Essentially, their point is it doesn't impact them in an adverse way. The management adds that 6,000 crore rupees of promoter entity debt is getting refinanced by long-term debt from ADIA, which is Abu Dhabi Investment Trust.
All right, and before we take your leave, let's quickly take a look at some of the important events to keep in mind for trade tomorrow. It's back to Mangalam for that.
Well, you know, not a lot of events taking place tomorrow because a large swathe of the country is celebrating Diwali tomorrow itself. But be that as it may, don't forget it's a Thursday tomorrow. It's the Nifty October series expiry. What a series it has been for the markets in terms of a decline and thereafter some bit of recovery from the lows of the last few trading sessions. So we'll keep an eye out on that. All eyes will be pegged on the US as well because, ahead of the next monetary policy meeting and ahead of the elections, we have the non-farm payrolls data and the big earnings coming in from the likes of Apple as well as Amazon. India macros, post markets tomorrow, we will get the core sector data that would come by 8 industries core sector data. And that's crucial given the sort of data that has come in terms of a bit of a sluggishness in the last few months for the Indian economy itself. So we'll keep an eye out on that. And finally, all eyes on China too, because the new refinance rules for home buyers come into effect tomorrow. Could that have a bearing on the Chinese economy immediately or by when is something that we'll most definitely keep an eye out on.
All right, Mangalam, thanks very much for that. So keep an eye out on these events as we come back. Well, it's a wrap on this edition of Markets Forward. From Surabhi, me, everyone on the team, it's goodbye. Thank you for staying with us. More coming up after a short break.